Hello everybody, welcome to the technical analysis webinar this evening. My name is Troy, I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, looks like everyone's up and running. Thank you very much. So real quick, let's go over kind of the standard beginning. Everybody should understand, and I think it's pretty basic knowledge that no trades are guaranteed to profit. There's risk with each and every trade that you take. With that said, there's also nice potential profits with each and every trade that you take as well, which is why we're all here, is to look at ideas that hopefully will improve upon your results in bringing the profits rather than the losses. And so make sure as you are thinking about trades to take and be involved with that you have some sort of risk management plan. You should probably be using some steps to maybe control the amount of risk per trade, whether you're determining trade size based on a certain percent of your balance, using stop loss marks, maybe using AvaProtect, which is a nice feature on our award-winning mobile app, AvaTrade Go. And also that feature, AvaProtect, is available on our web trader platform as well. So in some way, you should have a risk management plan built into your trading so that maybe you're not just kind of jumping in without really knowing what you're getting into in terms of potential profits and potential losses on your moves. As we go over some strategy concepts today, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, in general, I know we get a mix of new traders and experienced traders in the webinars. So real quick, the basics of what is technical analysis before we jump on the live charts. It won't take us but a minute to talk about that. Technical analysis is basically looking back at the price movements, usually on candlestick charts, to look for predictable patterns, to look at price levels that maybe seem important where there's reversals or breakthroughs with the price movements, maybe looking for trends that you think will repeat themselves, or ranging movements where there are movements between two price levels, up and down, up and down. There are different methods of technical analysis, such as those examples, that many find improve upon the results in terms of entry points and exit points being successful to bring profits. And so that's the idea of technical analysis. There are different ways of doing technical analysis. We tend to lean on manual methods of technical analysis in the webinars, meaning we're using our eyes and our knowledge of the movements to find our own price levels, our own entry points and exit points, rather than relying on an indicator, which is doing the same thing, looking back at the candlesticks, rather than just relying on an indicator to tell you when to buy or sell, like a stochastic indicator or Bollinger Bands or something like that, where if it crosses a certain point in the pictogram or the image that the indicator puts on your screen, or maybe it crosses an 80% line or something like that, it tells you that then you should buy or sell. And many times, if you're watching an indicator, you'll see that when it reaches the price levels you identified with your manual technical analysis, many times that's when it's telling you to buy or sell. The important part about doing things manually is that you can understand which signals to trust more than others based on the fundamental news that is occurring at the time that you're trading as well. And so the indicators aren't smart enough to know what the headlines are from 5 or 10 minutes ago, but you are. And so you should be, with practice, better than the indicator. You should be able to find signals that work out better by taking into account the fundamental news and manually finding price levels, and then use the indicator as sort of a support system to see if it agrees with you or not. And in that manner, you can have a checklist of making sure that your technical analysis agrees with the fundamental analysis direction, and then at the same time, maybe the indicator that you've chosen to use to corroborate your idea, maybe that's also telling you the same thing, and then you choose to trade. And that's the idea of having a trading strategy rather than just using one tool. And we'll kind of go through that today. Yes, Mohammed, this is a good question. So Mohammed is asking if you have access to the webinar after it ends. And the answer is yes, on our YouTube channel. Go to AvaTrade's YouTube channel. You'll see all of the webinars are posted along with a lot of other great information to learn how to use our different apps like AvaSocial, AvaTrade Go, and a variety of videos that you'll find on our YouTube channel, including this webinar, should be up by tomorrow, I'd say midday or so, typically by the next business day. So if you have any questions as we go along, please ask. Let's get started. Let's take a look at some of the headlines. And if you have anything to share, also, please feel free to contribute. I'm happy to share your ideas with everybody as well. So U.S. job openings jumped to 2-year high in February. Okay, that sounds like good news, right? And the idea of why are we looking at fundamental news headlines in a technical analysis webinar? And the answer is just to get an idea in 5 minutes, which way is the wind blowing right now before you jump in and try and start trading. And so you look and you say, okay, that's good news. Okay, job openings jumped to 2-year high in the U.S. Next headline, S&P 500 resumes record run on economic rebound hopes. That also sounds like good news. Next headline, oil rebounds on robust economic data. Okay, again, sounds like positive headlines. So I think it's real easy, and I pulled these articles up literally 2 minutes before we started. And it's easy to find which way is the sentiment today, just by pulling up and looking at some headlines. Fast food struggles to hire as demand soars, U.S. economy roars. So the problem now is they can't find enough people to hire because the economy is doing so good. Meaning most everyone who wants a job has a job, or they better offer more money because the people who are willing to work for the amount they're offering are already working. And so that's a problem that maybe if you owned the business isn't so good, but in general, in terms of signs for the economy, boy, that's a good problem to see, that employers are having trouble finding people to hire because the economy is roaring so much. And then next headline, IMF boosts global growth forecast, warns of diverging rebound. Okay, that's kind of a mixed bag in that headline. The first part, the International Monetary Fund boosts global growth forecast. And by the way, it's the second time they've done that recently. So again, good news, right? Not just in the US, but globally, that the economies, boy, maybe this COVID crisis is really coming to an end in terms of the economies. I know there's some outbreaks here and there around the world still, and obviously a lot of local areas in certain locations have some problems in terms of businesses and things like that. But in general, globally, seems like maybe the economies are rounding the corner, according to all of these headlines anyways. And you know, perception is 90% of how the market moves, because people perceive things and they buy or sell the assets or instruments, and there go the price movements. And so all the headlines we're seeing here are positive. They are warning that they think third world type lower income countries may have a worse time, and the more advanced, technically advanced countries, economically advanced countries will be the ones with the strong, robust recoveries. And so that's a bit of a divergence, they're saying, between those who will do very well and those who maybe will struggle after this COVID crisis. But in general, they're saying financially, globally, that the rebound maybe is expected to be even better now than they thought. Crude oil higher, economic rebound outweighs extra supply. Okay, so there was a supply glut forming, but crude oil is trying to climb now because of all of those positive headlines we just looked at. Okay, and so literally that took us 5 minutes, right? Now, if you jump on the charts and start trading, you probably prefer a certain direction. Let me do a quick quiz. So if we jump on the chart and we find oil dropped to a nice support level compared to oil went up to a nice resistance level, would you prefer to buy from the support level right now on oil or sell from the resistance level? If your indicator was telling you, hey, the price went down, now it's on a support level, buy, or if your indicator was telling you, hey, it went up for the last 20 minutes, sell, which signal do you trust more with the headlines we just saw? Should you trust the signal that oil will bounce off the support, or should you trust the signal that oil will drop off the resistance after all those positive headlines about the economy? This is where you can become selective. Yeah, buy, right? Thank you. Matthew, you were the first one. Uh, Buy makes more sense than sell right now. So this is where the indicator is only gives you half the information. You know, if your RSI says oil's overbought, you should sell, but all the headlines show you, hey, oil has every reason in the world to go up, then maybe you should be more patient and wait for oil to come down to a support level and buy rather than selling from that resistance level. Okay. And so it looks like we're all on the same page. I'm seeing more and more answers rolling in. So that oil's just one example. Maybe that's not the best one because there's kind of a mix there. There's a little bit of an oversupply of oil and positive economic data. But maybe if we talk about something like the S&P 500, okay, certainly I'd rather buy on the S&P 500 right now off of support rather than think that the resistance level will cause the S&P 500 to drop. Okay, and we'll look at the charts. We'll see. Would it have been better in the last few hours to be buying or selling on, S&P 500 and some different instruments? And we'll walk through how you easily could have been profiting after looking at those headlines. Assume you looked at those headlines 2 hours ago, and then we'll walk it through and see how well could you have been doing. Okay. Yeah, no, we're still on the AvaTrade screen. Thank you, Acha. Okay, so why am I on the AvaTrade screen before we get on the charts? I'm on the AvaTrade screen because I want to make sure you understand if you go to trading platforms and you go to AvaTrade Go, remember I mentioned AvaProtect as a feature as part of your risk management. You see it right here. It's on all FX pairings. It's on gold. It's on silver. For a small premium cost, you can protect against any losses by the hour, by the day. Okay, you choose the time frame that you want covered, and you can wait it out. You don't have to worry about it hitting your stop loss and then going the right way. You can wait it out for the length of time that you buy the coverage for, and typically the potential profit is way larger than what the cost of the coverage is. Okay, very cool feature, AvaProtect, and there are other features for risk management on the app, and I'll show you. It's a little easier to show you on the web trader platform, which also has the same thing, and both trade on top of your MT4 and MT5 accounts. So it's not like you need to have a web trader account or a AvaTrade Go account. They are user interfaces that trade on top of the MT4 and MT5 accounts. So if you log in from our main website here, you'll be on our web trader platform, which has the same features as the AvaTrade Go mobile app. But you can do this from a full screen from your computer. By the way, if you log in with your mobile to the web trader, it works like AvaTrade Go. It functions just fine via mobile as well if you log in from our website on the web trader. Now, real quick, let me show you. I always bring up gold. I don't know why. Maybe it's my favorite instrument. I'll bring up gold and show you that it has AvaProtect on it. So here's AvaProtect. The gold shield means AvaProtect is available. And let's say, with all the excitement on the markets and the US dollar looked like it was weakening today. Typically that allows gold to go up. And perhaps with all the stimulus talk that's been coming out of the US, yes, another multi-trillion-dollar stimulus they're talking about, maybe you feel fundamentally that gold should go up. And so let's pretend we found that gold is above a support level and you think it should go up. Okay, fine. So, and we'll look at gold in a moment. It's not just all make-believe. We'll actually look at gold on the charts. But let's pretend you decide you want to do a 10-ounce position on gold, which is 0.1 on the lot size. It shows you your margin requirement. Okay, so I can look and say, okay, I have plenty in my account. I have almost 1900. Margin requirement's only $87. Maybe I decide, oh, okay, let me go 20 ounces. Okay, margin requirement 174. Only about 10% less than that of my balance. It leaves me 90% in free margin still to handle the movements or to re-enter. Okay, so my risk management is being helped here by the order window. The same thing in the AvaTrade Go mobile app, it does the same thing. So trading on the MT4 and MT5, the order windows don't do that for you. Also, I could say, okay, let me program my stop loss. If we're at 1742 and I decide, maybe I think gold won't drop below 1700. So I put my stop loss at 1690. And by the way, you very well might want to be selling on gold. I'm not telling you should buy on gold right now. We actually haven't analyzed the chart. So if I put 1690 as the stop loss, you see I'm risking over $1,000. I might say, wow, I don't want to risk over half my balance on this move. So I could lower my trade size. That's one way to lower the exposure, right? If I go 10 ounces, now I'm risking 522. And I might say, I don't want to go with less than 10 ounces because I want the potential profit to be large enough. If I program my take profit at, I don't know, 1800, and I say, okay, I can make 577, but I don't want to risk over 500 also. So maybe I say, well, let me do this. Instead of putting a stop loss, if I think for some reason gold will move in a large amount the rest of the day today or over the next day or 2 days, then I could say, okay, let me put Ava Protect. And I could protect it by the hour or by the day. And I can do 2 days protection for only $82 cost. Now I can sit back for 2 days. And if gold goes up $10 even, which is a very small amount of movement for gold, if I'm right at all about the direction over the next 2 days, I easily can make back a lot more than what I paid for the protection. If the move goes, it doesn't matter how far the wrong way during this protected time period, everything is added back. Everything I lose on the trade would be added back when the protection period ends. And if the trade's still running, fine. You still get any negative floating added to your account from the protection when the protection ends, and the trade can keep running. If you get stopped out before the protection expires, then whatever the negative was when the trade closed gets added back to your account. You're only down the premium. Okay, that's my only risk during this covered period. If, however, the movement goes the right way and hits, let's say, my take profit at 1800, I just made 573 and I only had to risk 82 over that covered time period. Okay, so very cool feature. It's nice that the order window calculates your potential profit, calculates your potential loss to your stop loss and take profit prices, and also has some extra features as well for risk management on a number of instruments. Okay, now those of you that maybe want signals for technical analysis, so very easy on the WebTrader platform. You go to the Trading Central. On all live accounts, if you're working on a demo, get yourself a live account. On all live accounts, you have features like analyst views, market buzz. Market buzz is more fundamental news, gives you articles. Analyst views, technical analysis done for you. There it is, time-stamped. These are coming in all day long. And they give you the price levels that are expected to have breakthrough movements. They show the support, the resistance levels, verbally also breaking down exactly what they expect to see happen. And this comes from a team of analysts at Trading Central that puts this together. It's their full-time job all day long. And so they're doing a lot of the field work for you in terms of the technical analysis, drawing the price levels, etc. And they even give you some indicator analysis as well. In this case, the RSI, the MACD, etc. Okay, and you can look at currency pairings. You can look at cryptocurrency signals. You can switch to different categories, popular Forex, etc. Showing you the expected breakout moves, price levels, all of that. All right. Let's go ahead then and jump on the MT4 platform, which maybe many of you are more familiar with. And let's take a look. We'll work some technical analysis strategies based on the fundamental news as well that we understand is occurring. Let me just do a quick systems check. I have someone typing no audio. Type okay if you're all still with me. If you're hearing me fine and seeing my screen. All right, great. I've got enough responses. Thank you. It looks like we're up and running fine. So it must just be Leslie. I'll type a quick message and let Leslie know it's just her or him. Leslie can be a name for a guy or a girl. Okay, so I'm looking at what am I looking at? Euro USD. Okay, so let's get off the 1 minute candles first of all. 15-minute candles. What do we see happen today? The euro went flying up against the USD. Let's do another quick quiz. What typically happens? I'm sorry, if I increase the font size, we won't get the full screen view here. So I don't want to zoom in on my screen, but I will describe what's happening. I can zoom in on the candles a little bit, but you see what happens when I zoom in on the candles? We can't see the whole picture. So I've got to back out just a bit there. But if you have any questions, just let me know if there's something you missed or can't read or don't understand. Okay, so a quick quiz question on the USD. Does the USD tend to weaken or strengthen when there's good news globally? When there's good economic news globally, does the USD tend to weaken or strengthen? Yep. Some of you are saying USD strengthen, some are saying weaken. In general, when there's fear on the markets, the USD strengthens. And when people are really happy about the global economic environment, the USD weakens. And you say, and I see a lot of answers saying the opposite. Now, why would the euro go flying up against the USD when there's been a lot of optimism today on the market? Because people are buying into stocks and indices and commodities and selling their dollars, right? Giving away their dollars to buy commodities or to buy stocks. So USD weakens, stocks, commodities go up, right? Gold went flying up. Why? USD weakened. Oil went up. Why? USD weakened. Why is the USD weakening? Because there's less fear. We all saw the headlines. Okay. Now, if it's specifically only good news about the US, but there's fear around the world, then the USD might strengthen relative to other currencies, right? But when there's global economic optimism, the USD tends to weaken compared to other currencies because it's no longer needed as a safe haven. That people view it as a safe haven, they don't need it anymore. Now, gold is also a safe haven, and it's going up while USD is going down. And that's, if you understand why gold goes up when the USD weakens, then you understand gold is a safe haven against inflation, not against fear. Okay, so the gold goes up when there's fears of inflation or weakening of the USD. And so as the USD was dropping, plunging today in strength, then gold goes up with inflation fears that USD is getting too weak, especially with more stimulus coming in the US. So those are the fundamentals behind it. Now the technicals, we could say, okay, we understand why the USD weakened, why the euro climbed against the USD, and we're looking at 15-minute candles going up. We can look at GBP was different because the GBP weakened against everything today. USD Canadian, okay? USD dropped today against the Canadian as well. You see down, 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 and it's recovered a bit back up. This could be an opportunity, okay? Unlike that Euro USD, what do we see here? We see the USD rebounding after dropping all day against the Canadian. Why should the Canadian stay strong? What's their number one export that actually those headlines were saying the price was going up on? The number one export of Canada that should make the Canadian dollar maybe strong today? Crude oil, right? Number one part of the Canadian GDP, crude oil. we see the USD gaining back against the Canadian on a day where the USD was weak, right? And so if we see crude oil dip down a bit after climbing, so we see there's been a correction, right? There's been a correction. Crude oil went up, and that's when the Canadian strengthened against the USD, right? Crude oil pulled back down, and now the USD gained back against the Canadian. You see the relationship. Crude oil up, USD went down against the Canadian. Crude oil down, USD back up against the Canadian. Now, the question is, should this support level hold on oil? Support, 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 right? It's on a support level now. And since there's optimism today, maybe oil should bounce back up, you might think, now that it's reached a support level on the 5-minute candles. So then you go back to USD Canadian and you say it's nearing a resistance level up here. Okay, you see the resistance where it plunged down from. It's almost back to that resistance. So if we look at the bigger picture, 15-minute, we see, okay, that is kind of a significant price level right there. 30-minute, 1 hour, and we say, okay. So we've got resistance up here on USD Canadian, and then we've also got this resistance level that's closer that we just drew the line on. So if you believe this is a temporary correction, that the USD should weaken because of inflation fears with trillions in stimulus potentially still coming in the US, and the fact that the USD tends to weaken anyways when there's good global economic data, and oil had positive headlines about going up. So then maybe we say this is an opportunistic spike that you could sell from, right? It's a strong uptrend, so maybe you don't do a market sell, but you can see there's a resistance level here. You see here, resistance, 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 and it's slowing as it reaches that resistance. So maybe you take a double shot with your technical analysis and you say, all right, let me first maybe sell one trade by market from the high point. Okay, that's at the first resistance level. I put my stop loss above the next resistance level. And by the way, you could protect this with AvaProtect. All the currencies are able to be protected that way. So oil in general went up today. It's pulled back, maybe giving you an opportunity to go with the Canadian potentially strengthening because of the optimistic headlines for oil today. And so we find a resistance level here backed up by a higher resistance level. Okay, so the market move is at the first resistance level here where we see resistance, 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 and a drop off. So the last time it was at this price, it tried to go up and plunged. Okay, and so it's having a little trouble at that price, but looks like it might try and break it. So the question is, where do I re-enter if I want to, if it breaks this? And that would be potentially at the next resistance level up here, this red line up here. So we're fully prepared that it could break, right? So then you say, what's the type of pending order that allows you to sell from a higher point? What kind of pending order could sell from up here? Buy limit, buy stop, sell stop. It would be a sell limit. Sell limit sells from a higher point. That's the type of pending order that sells from a higher point. And so if the first trade goes bad, right, then we can say, okay, I'll re-enter at a better price, maybe with the same trade size as the first one. And that price then would be 1.2574 maybe. Okay, 1.2574. And stop loss then would be somewhere below that, or above that, sorry, 1.2574. 1.25, let's say 84, maybe 10 pips up, depending on what kind of risk, what kind of trade size you have. And then the take profit could be somewhere down at the next support level, right? Down lower, maybe 1.2556, let's say. Okay, so then we place a pending order. Oh, I entered something wrong. 1.2574, that's up here. It's too close to the price now. You can only do a pending order if it's a certain distance away from the market price. And so let's hold off a second. If it reaches this next resistance level, which it's doing now, okay, now we could just do another market sell. Okay, and then we go to the second trade and we say stop loss above the next resistance level and take profit. We were looking at the support level down here, and let's zoom back in for that. We see support level a little further down here. Okay, this was an old resistance. Once it breaks through a resistance level, if it comes back to it, many times it acts as support. That could be a spot you might think about taking profit, depending. If some people are more patient and they want to take profit at a further distance to wait on a longer movement. Depends if you're scalping or doing short-term moves. And the same with the first trade, we could put a take profit in the same location. Okay, I left a little space so you could see there's two trades there. Didn't put them at the exact same spot. So we're limiting the risk on the first one. If it breaks the second resistance, you're out. So we went through one resistance level and a second one. And then the next trade, it would have to break through two resistance levels as well. This first one and up to this second resistance level, which you can see. Let me slide that up a little. You can see here was resistance in this location. Resistance, and it plunged. So you've got your first trade in, hit the stop loss, limiting the risk, and now you're in on a second move, okay? And the idea of why are you going in this direction, you're looking at the fundamental news and believing that more times than not, that news would go in the right direction. Let's go ahead and take a look at crude oil. And we can see that support level that we drew down here. Let's go to 5-minute candles. Let me get rid of all these lines that are tying things up. And we see clearly this support level here backed up by a bigger support level here on crude oil. Okay, support, price hit and back up, price hit and back up. Then a new support formed a little higher, support, and support. Okay, so if we expect that optimism that was in the headlines to take over eventually here, and we're on a support level here on the 5-minute candles, then, and again, we're using small time frames now. So these are smaller risks, quicker in and outs, whether on the take profit or the stop loss. On some of the webinars, we're doing much larger candle time periods. So if I'm buying on crude oil, okay, I've got a stop loss below 1, 2 support levels. So I'm widening the strike zone. I'm not just going below this first support level, but I'm going below the second one, expecting the news of the day to take over, and then take profit somewhere before maybe today's high. You know, it got up there today already, so why couldn't it get somewhere up this direction again? So I'm looking at a potential profit of more than double what I'm risking to this price. And again, you could set up a pending order that if it gets down to, and very well easily could, the next support level, then you can re-enter from that better price, okay? And so this is an idea of understanding your first entry very well might go the wrong way, and being prepared to re-enter, being consistent with entries by support levels or resistance levels that you believe should hold based on the fundamental news that you looked at. And it's typical. The first couple spots you pick might not be the right ones when you're looking at something as small as 5-minute candles, right? Or 15-minute candles. So you've got to be consistent, manage your risk with each move, that you're not nervous about any one move. And you see my potential profits are much greater than what I'm risking. And the support or resistance levels, in this case, support levels, should work in my favor with the fundamental news. And so to prepare a pending order down here, this would be a buy limit. If I wanted to prepare a pending order from down lower, it would be a buy limit pending order to buy from a lower point, preparing in case oil drops down a bit further. Okay. And what we could do is just say, you know what, I'll widen my strike zone below this support and I don't need to re-enter. I'll just be more patient. And I still have about double the potential profit if it goes up compared to my risk. Okay, so two different ways to handle that, either a re-entry with a pending order or a wider strike zone to begin with on the first move. Okay, and it looks like the Canadian dollar is eventually here going to try and pull the USD down. It'll be interesting to see if that occurs while we're still running the webinar. Yeah, we can take a look at gold. Gold was requested, so let's have a peek. We see gold went rushing up today. No surprise, right? On a day where the USD was weakening, up went the gold against the USD. And then we see a little correction occurred. Gold pulled back down. So it reached a high up here around 1745, or no, 1746 and a quarter. And no, I'm sorry, that is 1745 and a quarter. And now is pulled back as low as 1739. So it's a pretty good pullback and looks like it's trying to bounce back up now. Okay, you see the bounce after this large pullback, it bounced back up through this little resistance point. So we saw support, support, support. It broke the support, that became resistance, and gold dropped. Now gold bounced back above that price level and is sitting on top of it. So if you think the USD is going to re-weaken now, and oil will go back up and the USD Canadian will come back down, then you would then think also that probably gold would go back up to near the highs that it was at today, if the USD is indeed going to weaken. So we would look at 5-minute candles. We'd say, where's the support level? I see a support level not until it gets down here, right? But it already hit that price. You see here, the wick. Why did gold bounce when it hit this price? It hit this price and went right back up. Look over here. That was the support level on the 5-minute candles. It had already established support here and bounced. And so as that wick hit that price, up went gold right back up. Okay. And so we see the USD Canadian trying to drop into profits. We see crude oil trying to rise. It's almost back to even after being down initially. And maybe you're more patient on gold. You could say if gold comes back down to this support level, then you'll buy, as opposed to jumping right in like we did on the USD Canadian and crude oil. So since we didn't successfully prepare a pending order yet, let's do that. Pending order, buy limit, buys from a lower price. And so the at price then would be 1740 or so, 1740.5 to get closer to this support level. So if I say 1740.5, okay, and stop loss below the support, maybe 1737.5. And take profit back up at the resistance today, maybe 1745. Just a little scalping move, prepared pending order. If this pushes back to a better price, then we've got about half the risk to get below that support level compared to about double the potential profit. And so the idea of waiting here is it's already halfway to the resistance level. So maybe you wait and see if you can get a little spot closer to the support that was established. It didn't quite touch the support yet. You see it got close, it didn't touch it. So maybe we're patient on this, see if it comes back down near the support level, and then at that point, I'm just cheating it down a little closer to the support level. That gives us a little less risk, a little more potential profit back up. And this very well could just climb. Very well could climb. If we look at the 1 hour candles, we see no resistance off to the left. There's absolutely no resistance over here. So this could just keep on climbing and go to a new high for the day, in which case your pending order doesn't hit, right? The next resistance level on the 4 hour candles is right there. Okay, you see 4 hour candles. So gold very well could cruise up to 1747 here and then decide to kick back down further. That's a resistance level in the 4 hour candles, up just a bit, out of sight on the small candles. I think maybe it's worth being patient on gold. See if maybe you can get the price you want down closer to this little 5-minute candle support level. But obviously you could be more aggressive if you so chose. Yeah, sure. Let's look at NASDAQ. NASDAQ has been requested, and then I think we'll call it a quit for the evening and let you all get off to trading. It looks like around the board, across the board, here's what happened. Here's US 500. We'll look at NASDAQ in a second. US 500 up, pull back down, right? Just like oil, just like USD Canadian. We had a move one way, a pullback, and now back up, right? Looks like the correction, the pullback is done, and now the move with the momentum of the day has started again. So if we're buying on US 500, stop loss below the pullback low, take profit at today's high, just before it. Okay, that's 50-50 risk reward just about. If it goes below the low of the pullback, I take the loss. If it goes near today's high, I take the profit, right? And we can also take Dow Jones 30 is there. It's referred to now as the US 30. Okay. So, and someone asked for NASDAQ. That's the US Tech 100. Okay. US Tech 100. We see NASDAQ's trying to climb too. Look at the bounce off the support level. Support, support, bounce, right? So again, you might say, all right, let me, and NASDAQ moves more points. So maybe I do a smaller trade size, 0.05 or something of that nature. I take a market move here and I say, okay, it very well could pull back in the short term, right? We're getting in after a large bounce. But the idea is, it seems like all of the instruments now, the correction, the pullback after all of the rising today, the pullback seems to have bounced now. So I put my stop loss below the low of the pullback and put my take profit just before today's high up at the next resistance level up here. And in this case, I'm risking less than the profit would be. Okay. Stop loss below the low of the pullback, below this little support area, and take profit before today's high. So if the momentum is on your side, fundamentally speaking, then you might expect, okay, it should get near today's high before it breaks today's low. If the fundamental news says it should go up, right? So you're trusting the support and banking that the resistance will be tested again. And you could take profit before it would ever break the resistance up here and still make a larger profit than what you had to risk to your stop loss below the support. Okay. And it really looks like everything's starting to swing, right? We've got crude oil, US Tech 100 starting in profit, crude oil trying to move past where it first went when we first opened, USD Canadian trying to teeter into profits, etc. So this type of setup where you have a limited risk, you've got the support or the resistance levels on your side, and the entry price is opportunistic, meaning you can risk less to below those price levels or above those price levels in terms of support and resistance, and you have a larger potential profit in the direction of what the fundamental news says maybe should happen this is where you probably find longer term success. And you're certainly not going to win every trade. We could lose all 4 of these. The idea is if you take 1,000 trades, it should help you tremendously to improve your P&L if you're using proper technical entry points aligned with the fundamental news. Okay. All right. Any questions before we end things? Yeah. Sometimes you can feel like trades aren't going good. Good question. When you're looking at scalping moves, when you're looking at 5-minute movement or 5-minute candles with the movements, and so it's very easy to get the perspective that in the first couple minutes or 5 minutes of a trade, that, oh, wow, it wasn't the right entry. You just have to be patient. Be patient, trust your price levels, trust the fundamental news. More times than not, it should come through in the direction you think, and you can always re-enter. Always re-enter if you trust the price levels and the fundamental news behind it. So, Acha, good question. Right now, I was showing like 5-minute, 15-minute candles because it's more of a scalping type strategy where you get in and out with the momentum as it exists right now. If we were looking at longer term moves, we'd be looking at different candles. So there is no one rule in terms of which candles are best to look at for price levels. It depends on your strategy and your goal. In this case, it's a short-term strategy where we're looking to scalp a profit off of the markets over the next few hours, maybe. Okay, over the next few hours potentially. So, so we can see the momentum trying to swing our direction. It'd be interesting to see how this small handful of trades turn out. I think maybe the initial momentum that was in the wrong direction starting out has started to swing, and those price levels maybe are working in our favor at this point. Okay. All right, everybody. Thank you for joining. Please don't give up if your first handful of trades don't work. I promise these strategies have the potential to work very, very well. And we're seeing the overall profit now kick into profit on the board as we're closing things off, which is nice. All right, everybody. Thank you very much. Until next time, good luck with your trading.